Hopefully, camera angle is good. YouTube, we're back for another video, man. Today is going to be a different video. I'm gonna actually do a how to start day trading from scratch, because it's come to my realization that a lot of people don't even know how to get started. So let's take a step back to take a few steps forward. You know what I mean? Let's catch everybody up to speed. So in general, most people be asking me what even is day trading. Day trading is basically investing on a shorter term scale. You're buying and selling a lot quicker, pretty much. That's the main difference between it all. That's what differentiates trading from investing. You're not necessarily holding your investment, you know what I'm saying? We're in and out of the market, you know what I'm saying? And you can trade crypto, you know what I'm saying? Futures, bonds, ETFs, all that good jazz. I trade Forex, you know what I'm saying? But I mean, it works for all currencies, you know what I'm saying? All markets, it works. So pretty much whichever market that you feel comfortable with trading, trade that, stick with it. Don't be flipping and flopping. Stick to a strategy, stick to a pair. Then once you feel like you're profitable, you've been profitable on that pair, if you want to switch over, then you switch over. But I wouldn't switch until you've been profitable on at least one pair. How you gonna trade 10 pairs if you can't even trade one pair? You know what I'm saying? Just gotta be mindful of your skill set, you know what I'm saying? Because you never know. You don't want to be out here just trading unnecessarily. You know what I'm saying? When you could be focused on one thing, getting good. Then you could look at other markets. You know what I'm saying? But too many markets, too many confluences, too many emotions. You know what I'm saying? So just be mindful of all of that. All of that actually matters. You know what I'm saying? But stop yapping. Back to the overall situation at hand. How to start day trading. Now that you know what day trading is. How to start is relatively easy. You could either have a laptop, phone, tablet, whatever the case may be, it works the same on any device. As long as you got access to a web browser or app store. Because you could download the TradingView app. That's what I have on both my mobile devices. And I use the web browser on my monitor and my laptop. But it's portable, you know what I'm saying? You can use it on your phone, use it on the laptop. Same deal. TradingView. That's the, you know what I'm saying, the app browser that I use to do all my markups, all my charts, all of that good jazz, all on TradingView. Then my phone purposes is for actually entering the trades, you know what I'm saying? So for y'all, as of right now, you really don't need to be worried about trading with real money. So you could go open up what we call a demo account. You get to basically trade with free money. You know what I'm saying? To basically learn the basics on how to enter a trade, the right lot size, risk management, all of that good jazz is where you learn on a demo account. So the demo accounts that I use or used would be MetaTrader 5. If it loads for y'all, that blue app right there, MetaTrader 5, and then there is the TradingView app right there. You know what I'm saying? Those are the two apps that y'all need right now to get started on how to day trade. Right? Once you get those two apps downloaded, open the accounts, open free accounts on both platforms. You don't need to pay for anything. Again, this is how to start day trading with $0. Download the apps. Open up the free accounts, free demo accounts, right? Now, once you get all that settled in, I'll have a screen recording of, you know what I'm saying, the app. So y'all can follow along with me, you know what I'm saying? But, dang, I haven't been on this bitch in a minute. Hold on. Well, this is what y'all will look like, you know what I'm saying? You'll have a new account, create new account, all of that good jazz. Demo account, you'll get your credentials, accept, you get your leverage, that's basically how much free money you have to play with. So 1-to-1 means if you have $100 in your account, you have $100 of trading power. If you have a 1-to-100, that means for every dollar that you have in your account, it's basically $100, right? You get the jazz, so forth and so forth. Then but right below that, you get to pick the account size. Be realistic, you know what I'm saying? Go 50K and below. You know what I'm saying? Once you do that, because you got to think, when you graduate from a demo account, you're most likely going to go to a funded account unless you got actual live money, like at least 5 to 10K to put into the market, right? Unless you got that, you're most likely going to buy a funded account. And most funded accounts are 50K, 100K, 25K. Those are the top 3 funded account sizes that you would get. So let's just do 50K, right? Hit accept, register the account, and hit start, right? Boom, all of that. Now, okay, there we go. I was about to say, it didn't load for me. But anyways, once you get everything situated, now you're on this screen. You can click this pencil in the top right. Now you can add all of your pairs that you trade, right? I'm going to add Euro USD where it's already there. That's the main pair that I trade, Euro USD. So let's just click on that. And then this, you know what I'm saying, menu will pop up, right? You click trade. Now, this screen right here is how you enter trades, right? But we'll get to that at a later date. Just want y'all to get familiar with the app first. So if you go to look at the bottom of your screen, you should have the tab bar where it says quotes, chart, trade, history, and your settings. Obviously, history and settings, self-explanatory. History, you get to see all of your past trades. Obviously, this account has no trades because it is a new account, right? Boom. Then you click trade. This is where you see your active positions. You click this plus mark up here. It brings you to the same screen that I was just showing y'all that we'll get into in a second. That's how you enter position also. And it'll just bring up your most recent pair that you had already traded. You can see that at the top, right? Then you got your charts. I don't necessarily use the charts on my phone because you can't really see all of the data. And there might be a fair value gap or a high over here that we just swept that you didn't see on your phone that could be very useful in your trading strategy. So I don't really use my phone, but if you have to, it still works. Just turn to landscape on Trading View. Still don't use the freaking charts that they give you on these apps. Just go to Trading View and just enter the trades on this phone. On the app. You know what I'm saying? But yeah, back to the quote page. This is where you can see all of your pairs. Now, you can see that 3-digit number right beside the time frame. That's the spread. Obviously, that number is high as fuck because this is the demo account. That doesn't really matter. You don't need to worry about that right now. But once you get onto a funded account, it will matter. But the spread will be a lot lower. You know what I'm saying? So you don't have to worry about it. Spread is basically what the broker charges for them to enter you into a trade. You know what I'm saying? Because once y'all get into a live account, you're going to have a broker. You can't just place money into the market. Because you got to think, if you're trading Forex, you're definitely going to have a broker because you're trading foreign currencies. Or you got to have money. You know what I'm saying? Or somebody regulating your positions. Right? And that goes back to risk management too. Because that broker won't allow you to take so many trades. So like, let's say if you got $100 in your account, right? You can only take a contract of 0.0, I think 0.10, 0.10, because that's $10, right? It greatly depends on your leverage. Most U.S. brokers don't have great leverage. You have to find some overseas broker. Some of them you might have to use a VPN. Some of them will just allow you to just create the account. Like I use Hero FX. And I think it's a 1-to-100 or 1-to-50. One of those two. It's still just enough. You don't need too much leverage because too much leverage can be bad. You don't want to have too much money playing around with, because you may blow it. Get too emotional. You know what I'm saying? Whatever the case may be. So boom. Right? Might be ready to take trades now. You looked at the markets. You know what I'm saying? You can see how the markets move. I'm going to get into that too after I show y'all how to take trades first. Right? So boom. I just want to show you the screen. We got it pulled up. You see where it says market execution. If you click that, you got a sell. You got buy limit, sell limit, buy stop, sell stop, buy stop limit, sell stop limit. All of that is just fancy for pending order. So like if price goes up to this level, it'll place you in a sell. If price goes down to this level, it'll place you in a buy, right? And if price places you in a buy, it can't go below this level or to stop you out type shit. You know what I'm saying? Or the opposite for going down or going up. But market execution is soon as you click buy or sell, you enter right when you click buy or sell, right? So you got your stop loss, take profit, right? It always fill or kill policy. You know what I'm saying? You don't really got to mess with that right now. You don't need to worry about that. Even when you get on the funded account, it's not really going to matter to you. But for now, stop loss, take profit, and then right above that, where that 2.01 is, that is your contract size. You know what I'm saying? Or your lot size, how much money you're risking. So let's just go back to 0. Right? So you got 0.01 is $1. So if I go up 0.5 is $50. One full contract is $100. And obviously 6 contracts, $600. 10 contracts, $1,000. 11 contracts, $1,100. You get the idea? So boom. Now you know how the lot sizes work. You know how to enter the trades. So once you place your lot size that's in line with your risk management and your account balance, you get your stop loss from the market, your take profit from the market, and then you just enter all that in right there. Just like that. It'll pop up for you just like that. Boom. Now, you've entered your trade. I can't really enter a trade because it's the weekend. So it's kind of a bummer. But I'm going to throw y'all to the charts. Okay, boom. So, you're ready to actually dive into the markets, eh? So, when you load up TradingView, your screen is going to look like this. A bunch of squiggly lines. But in fact, your screen might be white. And it's going to be green and red candlesticks. You can change all of this if you want to. I do it for my eyesight. I got my screen on dark mode. I got my whole computer in dark mode because, you know what I'm saying, it just helps me see better. You don't necessarily have to. It's up to you. But, again, I guess I will go ahead and do this all in one video. Fuck it. So you need to know how the market moves. So you need to learn about market structure. That's the basics. You need to know that before you can do anything else, or know how to take a trade, or know where to enter a trade. You need to know market structure, right? Highs and lows. Before we look at before I show you examples on the charts, the actual candlesticks, let's start from the basics, my nigga, and let's just draw it out, right? So let's start from here. Boom. Come down. Come up. We're going to do an uptrend. Boom. 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 Right? That's your uptrend. We got a low, higher high, higher low. And how do I know this is a higher low and this is a higher high? Well, this is just a high right now because this is our low. So technically this would be our lower low, higher high, right? We got our low, high. We got a lower high because this low is higher than this low. This high is higher than this high. This low is lower than this low. Now we're going to continue upwards. This is what we call a uptrend. Prices going up. So what do we have here? A low, a high, higher low, higher high, higher low, continue, 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 higher low, higher high, right? Let's do it to the downside. Come down, back up a little bit, down, back up, and down. You should know the same thing as this, but inverse. So we got our high, technically, we got our low, we got a lower high, a lower low, lower high. Now we're creating more lower highs and lower lows, lower highs and lower lows, so forth. So we call it a downtrend. Bearish, bear market. This over here, bullish, bull market. Bearish, bull. You know what I'm saying? That is how the market moves. Highs and lows. Highs, lows. Low, high. Low, high. Low. You know what I'm saying? It's pretty simple when you look at it like that. And even then, if I come down to the charts, let's hide all this again. If I change it from candlesticks to a line chart, it's all up and down, 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 up and down. Highs and lows, highs and lows, highs and lows. It just looks different because there's actual wicks. That's why we call these candlesticks. Because these little wicks right here, when you lighten a candlestick, you're lighting the little black wick. That's basically what that is. When it burns down, it burns to the body of the candle. That's what we call the actual body of the candlesticks. These are the candlestick wicks. You know what I'm saying? They tell you where price has been, and it tells you where price is rejecting. Wicks are very useful, but they also can be very deceiving at the same time, so be careful. You know what I'm saying? But now that you know that market moves in highs and lows, or lower highs and lower lows, let's look at some examples on a chart. And I'll jump up to the 1 hour time frame because the market structure is more clear. You know what I'm saying? Like right here. Let's draw this out. Let's start from here. We got a high, a low, high, lower high, lower low, lower high, lower low. But what do we do here? We break above this low, right? This is also a liquidity sweep, but I'll get into that at a later date. But we shift the structure. There's also another term for this in particular. We probably shift the structure down here, but this is a 1 hour time frame. So we shift the structure above the last high point, which is right here. We shift the structure here, boom. But what did we do in turn? We came back down, created more lower highs, lower lows, lower highs, and obviously lower lows. I'm not going to count that because for the sake of the video. But let's move this up, right? And let's just review that. Damn, there's so many fucking drawings. Let me delete some of this shit. Come on, bro. Okay. Jeez, how many freaking drawings is there? This was for a previous video. I don't even think I dropped it though. Okay. So this was the previous, you know what I'm saying, the candlesticks that I just showed you, right? So we got high, low, lower high, lower low, lower high, lower low. See this right here, I'm just going to go ahead and show all of this to you at one time. This right here, this move up right here is what we call a liquidity sweep. This is my strategy right here in general. Come up, sweep highs, and reverse. We're faking out everybody. It's called manipulation, liquidity sweep. It's all pretty much the same thing, right? The market does this so the big banks, the big money niggas can get better positions for themselves to make more money to continue the downtrend. Obviously, as you just seen. So this is where you gotta be careful, right? Lower high, lower low, lower high, lower low, lower high, lower low. But like I say, I did this on the 1 hour time frame. So this is why all time frames are useful. You know what I'm saying? Speaking of that, I'll go ahead and give you all the time frames that I use on a daily basis. As you can see up here, I got from the 12-month down to the 30-second. Obviously, I can't use the 30-second because I'm not paying for it. But I mainly use the daily, 4 hour, 2 hour, 1 hour, 30 minute, 15, 5, and the 1. Right? Daily, 4 hour, and 2 hour, I use to determine my overall bias, my daily bias for the day. 30, 15, that's to look for the overall trend. You know what I'm saying? 5 and the 1, entries, reversals, whatever the case may be. You know what I'm saying? But on the 5-minute time frame, for sure, there's a lot of fair value gaps in this leg down, right? That's a lot of fair value gaps that we disrespected. You know what I'm saying? But there's also probably a bunch of fair value gaps and a bunch of bullets and golden candlesticks in this move up, right? This is the whole manipulation. Because we probably had a bunch of small candlesticks coming down. Candlesticks starting to get smaller. Next thing you know, boom, 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 boom. We moving up with momentum. Then we immediately reverse. Liquidity sweep. Manipulation. You know what I'm saying? But there's also a fake out too, though. Because most people will see this and be like, oh, we shifted structure massively. We could probably keep going up, have a pullback, and continue to the upside. Which could very much well be the case after this move up. We could go up like this a little bit more. Probably tap into some order blocks, fair value gaps. I'll get into all of that at a later date. But it's just other confluences. But like, yeah, price could shift, come up all the way up like this, retest to continue higher. But that's why you got to be patient. You know what I'm saying? You don't want to chase a trade. Like this right here is a counter trend trade. If we already are coming down and you're buying at this point right here, I'm not going to say it's a bad thing depending on what's over here to the left. But just from where we started on the charts alone, you can't really do that. You have to be patient. You know what I'm saying? And as of right now, most of y'all don't even know what liquidity is. So you wouldn't even know if there was a low over here that this is what this was. We just swept this out to go sweep out more liquidity. You know what I'm saying? It's all a fucking... That's all they do is just buy and sell and just infiltrate the market, manipulate the market, right? So you just got to be at the right place at the right time. So at this given moment right here, we are in a bearish market. We are going down. We are not looking for buys at all. But I could see how you could argue for it. For the new person, I wouldn't, you know what I'm saying, really recommend it. Because you don't know how high we're going to pull back either. Because like I said, this is the 1 hour time frame. So there's a lot of miniature structure on the inside of this that price could just pull up, sweep, and then come back down. When you would have entered in a buy position, probably had your take profit up here or up here, stop loss just below. You would have got stopped out if we would have just tapped into all of this on the inside or swept these miniature highs internal and moved down. You would have been stopped out when you could have just been patient and scaled down to a lower time frame to see what's going on for real. Because I'm be honest, my trades only last an hour. A lot of my trades, I'm trading a 1 hour candlestick. I don't need to look at the, you know what I'm saying, all of this to know what I'm finna do. That's just not for me. I'm not swing trading. I'm intraday trading. So boom. let's say you want to learn about liquidity. You want to use that as a strategy, right? Liquidity is everywhere. Like, that's a strategy that I use day in and day out. So now that you know how the market moves, you know when, like, we actually shift structure for real. Because you can't shift structure if we're already going to the downside or the upside, right? As long as, so this will be a low, this will be a high. This low hasn't been swept out, right? But the high did. So now we got a higher high and a higher low. So this will be the last low point, right? We came up, we didn't sweep the high, but we didn't sweep the low yet. So we have not shifted structure until this given point right here. We closed below the low. We created a lower high, another lower low. So at this given point right here, this is our last high point. This is our last low point. So now we are in a bearish market until we shift or break above the high. That is when we shift the structure. So boom, we shift the structure here again. Lower high, higher high, higher low. We didn't shift the structure, but we also didn't break the low yet. These are equal lows and relatively equal highs. Right here, lower high, lower low. We broke below the low, we shifted the structure. Now we're continuing the downtrend. This would be our last lower high, lower low. We broke above. Now we shifted the structure. But this is again where you would get manipulated because we came right back down. You know what I'm saying? Created more lower highs and lower lows, lower high, lower low. This was a news candle. This doesn't really count, but it also was a massive liquidity sweep. Came up, swept. I think this was monthly highs. Came back down immediately. Liquidity sweeps are king, bro. Sweeping highs and lows, because that's all that the market does. Like, anytime that there's like an elbow point, like where price rejected immediately and turned around, that is market structure. Like, I was going to point to it, like you could see it. This is market structure. This is a structure point. This is a structure point. Structure point. Structure point. Structure point. Like, you see what I'm saying? Like, you get the idea. And if you follow those structure points, you can see how the market moves. Dang, my stuff lagging. That's crazy. But once you can, like, price repeats itself. So, like, anytime we sweep highs and sweep lows, we either going to blow past it or we're going to get an immediate reaction out of it. You will know because of them candlesticks. I'm telling you, if we're going to blow past that liquidity sweep, we're going to go past it. Right? But if we're not, we're not. We'll get a reaction. Just like right here. We this low right here, swept, immediate turnaround. I actually lost this trade right here. I wonder if it'll come up. Well, it's right here. I move it over. We got stopped out right there. Right here. Crazy, I got stopped out with my own strategy. But that's also another thing. I don't really necessarily have to have my setup every day because I trade London session. So I know how London session moves. I know we got to sweep liquidity or some type of manipulation before we get our real London session move. Like, I could just show you. Let's jump down to the lower, to the 30-minute time frame. Let's go down to the 15. Right? London is the blue box. Anytime London session opens right here, for example, London session open, manipulated to the downside, swept these lows, and moved up. London session open, immediate dump down to sweep these highs to reverse, and New York continue to the upside. Again, right here, London session open, manipulates to the downside, up. London open, manipulated to the upside, reversed. Then New York reversed again. Like, So me seeing that, it's like, okay, a manipulation is pretty much a liquidity sweep, if depending on who's explaining it. You know what I'm saying? So manipulation, sweep, I just wait for a lending session to do that, and then I target the opposite direction. And I'm short biased on USD, Euro USD at least, because I'm bullish on the US dollar, which makes me short biased on Euro USD. Because if you're trading Forex, you're trading a currency versus another. So I mainly trade the Euro dollar, you know what I'm saying, or Euro pound, whatever the fuck you can call it, versus the US dollar, right? So anytime that price goes up, that means the euro is getting stronger. Anytime price goes down, it means the dollar is getting stronger. It is the same thing for every other currency, even GBP CAD, the pound versus Canadian dollar. You know what I'm saying? Pound gets stronger, it goes up. Canadian gets stronger, it goes down. But if you're trading the S&P 500 and all of that, anytime that it goes up, that's bullish for the dollar. Anytime it goes down, obviously bearish for the dollar. So that's something to take into accountability too. But at the same time, it's really not hard, man. Once you get into the charts and actually put the time in to study, because trading is pretty much 25% technicals, 75% psychology. I just taught you how to trade. You know what I'm saying? But I can't teach you how to be a trader. You know what I'm saying? That you got to learn on your own. You got to walk your own journey. But I can teach you how to read the markets. The market move up and down, up and down. We sweep highs, sweep lows. You target the other side of the lows or the highs. It's pretty much that simple. Your lot size is how much money you're risking. 0.01 is $1. 0.10, $10. One full lot size, 1.00 is $100. 10.00 is a band. You know what I'm saying? It's pretty simple. Risk management, you don't want to risk no more than 1 to 2% of your account. So if you got a 25K account, you're not risking no more than 2.5 as your lot size. $250. That's 1%. You know what I'm saying? Stick to your plan, stick to your risk management, and you will be, you know what I'm saying? You will be all right. And don't worry about losing. It comes with it. The quicker you can accept the loss, the quicker you can get over it and learn from it and move forward. Don't sit there and dwell on it, or you're never going to move forward. You're never going to get past it. It can really kill the charts. Keep moving forward. You know what I'm saying? Don't sit there and dwell on your losses. It's not worth it. You always got to keep a clear mind and be emotionless when you're trading. Any type of emotions, you may as well not even trade. When you take a trade, you should be able to place that trade and turn around and walk away and go about your day and come back to it. You know what I'm saying? Whether you lost or whether you won. And even then, when you're taking trades, you need to know why you're taking the trade. Think about what could go wrong. Think about what could go right. And even when you win, think about what you did. How did you win? Even when you lose, think about how did you lose, obviously. But don't let it, you know what I'm saying? You know what I'm saying? Y'all know what I'm trying to say. Don't dwell on it, bro. Because it's just going to stop you in the long run. And it's going to do more harm for you than good. Like I said, the quicker you can accept the loss, the quicker you can learn from it. And hopefully not make that loss anymore. But, again, man, trading is simple. But being a trader is hard. Because you got to get over the fluctuation of money. You got to get over the fear of missing out. Because you might miss a trade and it might literally take off without you. Don't chase it. You know what I'm saying? If it gives you a pullback, enter. If it don't give you that pullback, oh well, because you don't know if it's going to continue or not. Let's say if you enter and it immediately turns around. Now you just lost the money for no reason. You know what I'm saying? Avoid unnecessary losses, man. Cut your losses. And as long as you're in your risk management, you're chilling, bro. But that's all I got for y'all, man. Hopefully this video was helpful, man. That's all that really matters. Hopefully you took something from this. It's simple. Highs, lows. Highs, lows. When we break the highs, we shifted the structure. But be careful, because that could just be a liquidity sweep. Wait for the reaction. If we get more confirmation to the upside, wait for the pullback and then enter. If we sweep that high and we get an inverse of a fair value gap, wait for the closure of that third candlestick to make sure that we fully inverse the fair value gap. Then look for short entries. You got to be patient, man. Make it make sense. Say the trade out loud why you're entering the trade. And if you can't do that, don't enter the trade. You know what I'm saying? It's that simple. But I'm finna get off here so I can try to get this video downloaded for y'all and uploaded in the morning. But like I said, man, like I always say, man, y'all stay blessed, stay motivated, stay disciplined, and good luck on y'all's journey out there, man. Hopefully y'all stick to it. But don't just constantly keep blowing money. If you need help, that's what we're here for. That's what you got mentors for. My socials, obviously right here. Tap in on my socials. You know what I'm saying? I'm always here to help. So, again, y'all stay blessed, and I'll catch y'all in the next video.